welcome back to another episode of Market Grinders. I know it's been a while, so just want to come back and talk to you guys about some of the basics when it comes to investing in the stock market. There are 4 things that I think about that all successful traders need to do from a basic standpoint. The first thing is we should always think about our entry price and what drives our entry price. Why are we getting in at our entry price and having the discipline to wait on our entry price? The second thing is our exit price or our exit strategy. At what price do we expect to get out of a trade? The third thing is time. For a lot of my options investors and even long-term investors, and crypto investors. So what is the expected time frame for us to get out of a trade? And then the fourth thing, and something that's very, very important when it comes to trading in the stock market, especially if you're trading options, is your I'm wrong level. So we all get into a trade and we think this trade is going to, take off and go to the moon. Sometimes it doesn't. Sometimes the trade turns around and it goes in the opposite direction that we expected it to go, and we start to lose money. So at what point do you cut your losses? I think that's a valid question. A lot of people talk about everything going to the moon. A lot of people talk about all the money that they make in the market. But for me, the biggest thing in the market is mitigating loss. So you gotta have an I'm wrong level. So going back to the first topic, entry price. So the way that I go about choosing my entry price is I watch a chart, right? So first I'll pick a particular stock. I'll look at the trend line on that stock. From sometimes I do a week, sometimes I do 2 weeks, but normally I go out to about 3 months. When I'm looking at a 3-month chart, I also try to find my support and my resistance levels for that 3-month time period. Once I find my support and my resistance level, support is where the stock kind of historically hangs out for whatever time period. For example, if it's a 3-month time period, support would be where that stock is historically at for the 3-month time period, the low point. The resistance is the same thing, but opposite, where that stock has normally ran up to and then fell back down from in the time period. In this example, a 3-month time period. So then I look for the lowest point, right? That's the best time to get into the stock, is when it's at its lowest point. For instance, if a particular stock has run up to $50 a share, and then it drops back down to $30 a share, then it runs back up to $55 a share, then it drops back down to $28 a share, then it runs up to $60 a share, and it drops back down to $32 a share. I would call my support level $30. I would call my resistance 50, meaning that it hasn't broken through the 50. That's where I start to see resistance, meaning that it hasn't fallen through the 30, even though it hit 29 at some point, but it's an area. It's not specific. It's an area. So I'll call that area around 30. So then I will look to get into that particular stock at 30 in hopes that it will go up to 50. So one of the best ways to get in at 30 is to, for one, be disciplined. And if 30 is your number, 30 is your number. I don't buy it at 40. I don't buy it at 39. I buy it at 30. So one of the best ways to get that price is when you purchase your stock, you have an option to buy at market, which means whatever that stock is at that particular time in the market, that's the price you're going to pay. So when you hit the buy button, if the stock is at $40, it's going to execute that buy at $40. One thing that I use is a limit buy. So a limit buy is I can set the price that I want to purchase that stock at. So if I want to buy 5 shares at $30, I would set my limit buy price at $30. This would ensure that my stock would not be purchased until it hit the $30 mark. So as soon as it hits the $30 mark, the order goes through and the stock is purchased. So now I've gotten in at from the information that I have, I've gotten in at the best price that I could possibly get in with the data that I have. Now, with that being said, what normally happens is you set your limit buy price at $30. What happens? The stock falls down to 28, 27, 26. That's part of it. That's part of the game. But you're fine because you know that the stock the stock support level is around $30. So 28, 27, that's around $30. And you know, historically it goes up, you know, to around $50. Now, it's about time. It's about having enough patience to wait until the stock hits your price of $50. Once it hits the price of $50, there are a couple other strategies that you can utilize to lock in top gains. So, for instance, it hits $50. I mean, you could set an alert on a lot of the apps. I'm not sure if Robinhood gives you the ability to set an alert, but I know with E-Trade you can set an alert. So when the stock hits $50, it'll alert you and it'll say, your underlying stock has hit $50. So you go to your app and you hit sell. You also have, once the stock is purchased, you can also have a limit sell order, which says, okay, I bought the stock at 30. I can hit sell immediately, right? And I can put in my limit price, 50. So now the stock isn't gonna sell until it hits the $50 mark. So the stock goes up to 50, it automatically sells. My gains are locked in. I never had to even look at the trade again. The downside to that is the stock could continue to go well past 50. So you can miss out on gains. So if you utilize that strategy, you have to be fine with missing out on additional gains. And that's the thing with the market. Discipline and patience. You're not going to get every single dollar every single time, but take those gains and then move on to the into the next trade. Another thing to utilize is it's actually a limit sell order as well, but it's called a stop loss, right? So what you can do is you can set your stop loss at 10% from 50, right? If 50 is your target, once it hits 50, you hit sell and you put limit stop at 5% or 10%. What that will do is once your stock hits 50, and if it drops down 10% below 50, it'll trigger a sale for you. Now, if it continues to climb and goes to 60, 70, 80, it's still gonna sell 10% lower than your highest target. For instance, if it hits 80, it's gonna sell 10% below 80, which means you'll capture the gains from 50 all the way up to 80, and then you'll give back 10%, and then it'll sell the stock off, which is a better way to get a little more bang for your buck when it comes to locking in your profit. The two other things that I talked about at the beginning of this video would be your I'm wrong level and time. So you have to. The market is all about time. It's all about time. I'm a firm believer in being a long-term investor. That's time. That's me. I put money in day one. I'm willing to wait day 365 to take my money out. And with that strategy, the aim is day one, the stock is $5. Day 365, the stock is $20. So I made $19 profit times the number of shares that I have. That's the easy and simplest way to invest. The downside to that is time, right? You have to be patient. You have to have enough money, or that you have to be able to tie your money up for that period of time. When it comes to for my traders who trade options, and I'm an avid option trader. I love options. Time is even more of the importance, because when it comes to options, you always have to set an expiration date, and you set that expiration date. And once that expiration date hits, If your options contracts aren't where you thought they would be, you could lose all the money that you had in that particular option contract. So one way to mitigate that, and this is what I do, I always buy out more time. For instance, if I'm buying a particular option and I expect for it to hit my target price in 3 months, I'll buy a 6-month contract, which gives me additional time. Because I don't know about you guys, but what normally happens to me, if I buy an option for 3 months, the option is below my strike price for 2 months. That 3rd month, it gets right at my strike price, and then it falls down. And then the 4th month, once my option has expired, that stock normally takes off and goes to the roof, and I end up, not making as much as I would have made, or cutting my losses and getting out of the trade earlier. So what I've developed, the discipline that I've developed over time is to purchase more time. Now, the option contract will cost you a little more if you're holding on to it for a longer period of time, but that little more is just psychological, right? It's, we're taught and conditioned to buy everything at the cheapest price. But when it comes to investing in options, the cheapest price is not always the best price, because when you buy at a cheaper price, like the saying goes, you get what you pay for, right? So you get less time in that option. Now, if I expect for the options contract to make a move within 2 weeks, fine, I'll buy it out for 3 months. If I would have bought a 2-week contract, it could have cost me, I'll say, and this is just me making up numbers in any particular stock, it could have cost me, or any particular options contract, it could have cost me $1.15 per share if I would have bought it for 2 weeks. If I buy it for 3 months, rather than $1.15 per share, it may cost me $2.15 per share. So when you're purchasing options, and the guys on the channel that who purchase options from time to time, you understand this. Everything is done in multiples of 100. So when I say $1.15, that would be $115 is what one contract would have cost me. So the difference between me paying $1.15 and $2.15, I get an additional, I get 3 months for $215, which would be $2.15 per contract. And if I paid $1.15, I may only get 1 week or 2 weeks of expirations for $115. Now, if I only have $115 and I just want to get into this trade, I get into trade with $115. In 2 weeks, the option contract is not at my strike price. I lose my entire $1.15 per share, which equates out to a loss of $115. I would rather wait until I can come up with $215 and buy for 3 months. Now, I'm expecting this move to happen based on the research that I've done on a particular stock. I'm waiting on this move to happen within 2 weeks. But if it doesn't happen in 2 weeks, I still have 2 months and 2 weeks left for the option to reach that particular price. That's one of the biggest disciplines to have when it comes to trading options. Always buy additional time. Additional time just allows additional time for the stock to hit your target price. And then the I'm wrong level. This is super important, very important when you're trading options. When you're trading stocks, the I'm wrong level. It's still important, but when it comes to trading stocks, you don't have an expiration on stocks. So I can hold, if I buy Apple today at $149, and it drops down to $120, I can hold it for 100 years if I can, right? If my lifestyle allows me to hold it that long without needing my money back, I can hold it for 100 years. And that's my mindset. I want to. This is money that I don't need, right? I want to be able to hold this money and those underlying assets for 100 years if I want to, and give it to my great grandkids in some situation. But when it comes to trading options, it's a little different because you do have that expiration. So if I'm expecting my strike price to be $50 and the stock, or I'm setting my strike price at $50, and the stock is at 48, and it starts to go down over time. It's from 48, 47, 46, 45, 44, 43, and then I'm like, I only have 2 more weeks left in this particular options contract, so I have to make a decision. Do I cross my fingers and hope that the stock turns around and goes back up to 50 and I break even, or I make a couple dollars, or do I cut my losses and take a 20% loss or 10% loss and take that money and purchase another option? The best strategy that I've learned, if my time is short, is to cut your losses and move that money into another options contract and make up the profit there. Because really, crossing your fingers is not a strategy. And when it comes to investing in the stock market, it is all about strategy. So I hope this video was helpful to you guys. I hope you're still being active in the market. Like, there's no time greater than this time right here to be in the market. There's a lot going on. There's a lot to come. Normally November, December, going into January, we normally get a nice bull run, and we've been on a bull run here as of late. So I do expect a small pullback. That's just opportunity to, buy into the market and the stock market, as well as the crypto market. And if you're not actively investing in the market right now, please be taking the time to research the market, look at YouTube videos, reach out to me. I do one-on-one consultations to help people set up their accounts, to help people purchase options, to understand options a little better, and just overall coaching. Reach out to me, reach out to other family members, look at other YouTube pages, but continue to build your skills, because it takes time to build a certain skill set, and it takes time to get the discipline that it takes to be successful in the market. But it doesn't take as long as you guys may think, and it is well worth the investment in yourself to learn how to actively trade in the market and actively trade options. This is a skill that you can pass down to your kids. Something that will last you guys for generations. And if you're trying to get out of the job that you don't like, this is a great way to do it. Or you're trying to retire early, or just trying to make extra income on the side. But again, I thank you guys for sticking with me. Thank you guys for taking time to watch the video. And if I gave you any value in this video, please subscribe to the channel. Hit that like button, turn your notification bells on. I'm gonna try to start, as we get closer to November, I'm gonna try to start doing more videos on a daily, because the market is man, it's rocking and rolling now, and it's starting to give us a lot of opportunities, and I'll be giving you guys some trades here and there. And if you're watching on Facebook, great, thank you for watching on Facebook, but please hit the subscribe button on YouTube and set up a YouTube account and start following me on YouTube. It helps my channel out, and it provides me a way to give you guys more info and more insight, rather than just clicking the link on Facebook and coming over to YouTube. And it just shows support. It shows support. And the guys who have subscribed, thank you for the support. But I won't hold you guys any longer. Again, thank you for watching the video, and thank you for subscribing to Market Grinders. And until next time, keep grinding.